now, we're going to go back to Jackson Hole and our economics editor, Michael McKee. He joins us now with David Kotok. He's the chairman and chief investment officer of Cumberland Advisors. Mike.
Well, Carol, he's also the man through the Global Interdependence Center that helped put together this conference. So I'd like to thank you for bringing all these famous people together. David, you heard the Fed officials a moment ago saying they're divided over monetary policy. Obviously, fiscal policy, there is no agreement. What's an investor to do in this kind of situation?
Well, you see investors retrenching. You see the markets down a few hundred points on the Dow this week while all this debate takes place. The uncertainty premium grows. I don't blame an investor for carrying an uncertainty premium. It's bewildering. Now you have to make a fundamental decision, in my view. Does the United States of America default? My answer would be no. It has the absolute power to make a payment in a timely way. Does it have a political system that has all these squabbles, partisan fights? Absolutely yes. So therefore, see beyond the political system, have confidence in the system that will eventually work. We will pay our bills. There will not be a U.S. default. And the markets will celebrate the certainty of the outcome when it comes.
Do you stay in equities right now? Everybody seems to want to get into treasuries.
We're fully invested in our U.S. equity accounts, and we have actually taken the weight of financials to an overweight, because they're paying the penalty price for all this nonsense, and they look very cheap to us. But we are confident in the United States and in our U.S. markets.
You think that at this point, treasuries are a good buy, or are they going to snap back if a deal is reached?
Short-term treasuries are not a good buy. They're the equivalent of cash, and they earn zero. The long end, or the intermediate end of the treasury curve, to us does not look to be the bargain. The spread product is a better place for a bond investor than the treasuries themselves. So in our shop, we are very underweight treasuries. We are rather emphasize the credit sectors where the spreads are wide.
And what would those be right now?
Well, you got a very good for a U.S. taxpayer. You get a very good bargain in tax-free municipal bonds. You can buy tax-free bonds backed by instruments which are federally guaranteed at yields higher than the taxable instruments that guarantee them. That's absurd. It's an anomaly in the market. So that's one possibility. Build America bonds, which is a taxable form of a municipal bond. Good widespread to treasuries. A bargain as well. There are places, you've got to do a little research, but there's places to go.
Very quickly, 30 seconds, a short-term investor next week. Do you want to have money on the table, or do you want to sit it out?
Well, a short-term investor, I would play the trade because I think there's a deal and markets go up. And if there is no deal and markets really get hammered, then every investor gets hurt. And that is why it's such an extreme position. I bet in favor of the up.
Samuel Johnson said, nothing concentrates the mind like a hanging.
That's great.
Thank you very much for joining us here in Jackson. I'm going to send it back to you, Carol, in New York.